Mullen Automotive's ticker Mullen is up 770% as we're recording this video. Is it actually? Well, no. So what they've done, firstly, is a reverse stock split. Again, if you've been watching this stock at all, you'll know what a reverse stock split is because this just keeps happening time and time again. Again, that was effective from today. Now, why would they have done this? As it says here, but as you would most likely know anyway, all that does is normally to meet the NASDAQ listing rules of staying above $1. Normally you're not allowed to go below $1. They'll give you a period of time. You have to be trading back above that or you are at risk of being delisted. So again, if you can't get your stock up there naturally, the only way you can do it is by doing a reverse stock split. And that's all you've been seeing on Mullen happen time and time again. You go back to May, and that's if we go onto this chart here, you can see it. Went back to May and they did a 1 for 25. The one that happened today doesn't quite show on the chart yet, but that's a 1 for 9. And again, we keep seeing this time and time again. Never a good sign. Like you've seen here, whenever you have this, all it will do is lead to a further sell-off because it just shows you more weakness in the company. So really, what can we be paying attention to on this stock? So again, definitely not a stock I would be buying long bias. Again, we talked about that back here. We talked about that even going into the end of last year, and all that's happened since then is obviously we sold off 99%. And the reason for that is if stocks are doing reverse stock splits, never usually a good sign to be buying a company like that. So what are the key levels? So right now we're basically still trading at fair value. On this stock, for us to become even slightly overbought, we would have to hit our first deviation. And before our reverse stock split, that was at $2.16, as we can see here, because the data has not been adjusted as of yet. So that's where the level is pre-adjustment. Now, what does this happen when you account for that 1 for 9 stock split? Takes us ages away or miles away at $19. So this stock now, to even become slightly overbought, will need to hit $19 for us to even really look at this stock short bias. So basically, what does this stock look like to me? And don't forget again, this old data will adjust. So that won't be $11. That'll be around $100 once they do that reverse stock split. Or at least once they update the data going back, that should be what it is. So what do we actually think is going to happen with this stock? Really, most likely going to continue down. Very small chance you get some sort of a squeeze or whatever. Then potentially we could see some sort of a move up here. But again, don't forget, from current price of around 80 cents or so, you would still need to see a move of over about 2,000% just to become slightly overbought. Again, that first deviation is considered slightly overbought. Not usually something we massively look to short. We tend to focus on the second or third deviations, which in this case is $5. So, you know, miles away. And again, that's $5 pre-split. So don't forget, that is actually really far off. Because again, if that's $5.30, all that would mean is that's actually at $47 for us now to become overbought. So again, that'd be basically all the way up there. Is the stock likely to do that? I mean, I guess we'll see in time, but not going to be something I'm long biased on at all. The only way I look at these kind of small caps, which continue to do their reverse stock split, is short bias. And all I wait for is for them to move. So again, for this stock, I would need to see a move to $19 before I even pay attention to this stock. I have an alert out for that. And if we got to that level, again, all I am is short bias. We wouldn't short the shares nakedly because that adds a lot of risk. And again, it can be hard to borrow. It's hard to borrow now. Probably going to be not available to borrow by the time it gets to $19. So the way I would always be looking at it is looking to trade it through options. And there's two main ways. Either we just trade some outright puts or we trade some vertical spreads. But that's what I'm looking at on Mullen. Again, not long bias on the stock at all, so have the alert out. If for any reason it does move to the upside, then I'll trade it to the downside, but I'm not going to buy in anticipation of a move to the upside.